When it comes to commercial real estate, people either love or hate the market, and these days I'm not sure there's a lot to love. We're emerging from a pandemic, but of course the Fed has raised interest rates instantaneously to try and fight off inflation, and commercial rents are still taking their own sweet time reverting to pre-pandemic levels. That being said, there's always tomorrow. We're joined with Rick McCready from the Davis Companies, and welcome to the Language of Business.
Hi, Greg. Hi, everybody.
Rick, what are the commercial real estate trends that you're seeing post-pandemic?
When the pandemic started, I think one of the things that happened that was most notable, that a near decade trend toward urbanization suddenly got flipped on its head. And that affected both office markets, residential markets, everything. People wanted to get out of the cities and wanted to get to greener spaces where they could be outside, where they no longer cared about commutes. The beneficiaries of that were office buildings that were in the suburbs that had fallen out of favor. But now they offered the things that a lot of businesses wanted. Another trend was that you saw a lot of money go into life sciences and biomanufacturing. Those people had to go to work. They had to be in their offices. And the infusion of capital and the occupancy, I think, triggered another trend, which was converting office buildings into lab spaces where the dimensions of the building permitted it.
And what are you seeing in terms of residential trends?
So again, it's an about face on urbanization. There was a tremendous demand coming from people in the city to get to the suburbs, to get to places where they would have land and outdoor spaces. The other thing is you saw people relocating to warmer climates, places like South Florida, Phoenix, other Sunbelt states, because they didn't have to go to work in New York or Boston anymore, and they suddenly realized that the quality of life was better. I think the other place that benefited was second home markets, because folks who would have to go into the city and could only use those homes, maybe for the weekends, maybe only 2 weekends a month, were now living in the Hamptons, living in Nantucket, living in Palm Beach. And so you saw a huge demand for those homes. And as a result, housing prices in all of those locations went up.
On the residential side, you have a lot of people looking and not necessarily enough inventory. So a lot of properties are easily being sold above list. Has that been your experience in terms of the suburban locations in Boston?
Yes. And I feel very sorry for the buyers out there right now, because being forced to put forth terms to tie up properties where they don't get the opportunity to inspect. They don't get the opportunity to have any kind of financing contingency. They have to move extremely fast, and they have to be responsive to counteroffers that may come back that are, 10, 15% above the asking price. If you're a seller, on the other hand, it's been an extraordinary time to market your home, because not only nice houses, but houses that would have been very challenged in other environments, where there was more inventory on the market, are selling at unbelievable prices. I don't know how long this will continue. I suspect that we've seen the top, and it's going to start gliding down a bit.
The Davis Company has nearly been around for almost 50 years. What do you think your secret of success is?
I think the number one secret of success is your track record and how you deal with your investors. If you can deliver consistent returns, that is the first and foremost thing investors are looking for. The second thing I would say is honesty. When you have a failure or something that doesn't work, you have to face up to it and be honest with your investors about it. And then the final thing, I think, is create as many tools as you can in the toolbox so that you can go through cycles. So, for example, we have folks in our shop that are expert in distress and bankruptcy and pointing receivers, foreclosures on the one hand. On the other hand, having, as I said before, development capability to build a product and create cash flow is another great tool to have in the right point in the cycle. So I would say those are the key ingredients of success.
There is excess capital in the world and different investors are looking for different rates of return. What do you think is your sweet spot in terms of the best investors the Davis Company wants to work with?
Well, first of all, we want to work with investors that understand their strategy. We're not a REIT. We don't produce dividends on a recurring, regular basis. We are more opportunistic, more value add focused, total return focused. So we need somebody who's got the patience and the vision, frankly, to appreciate our risk assessment, our approach, which is primarily to come in to complicated situations and be able to buy something below its intrinsic value because we see something that other people don't see.
Rick, thank you very much.
You're most welcome. Thank you. Nice to meet you.
Rick McCready of the Davis Companies talking about commercial and residential real estate trends post-pandemic.
Are you a problem solver? Do you see the big picture and the small details? Want to turn big data into big decisions? Take AI to the boardroom. Translate rocket science into the science of business. Build your career at digital speed with a Master of Science in Business Analytics. Be ready for careers like analytics consultant, data science, analytics strategist, data translator, BI analyst, technical business analyst. 10 months and you're in business analytics.
What goes through the mind of a venture capitalist before they actually fund a startup? And what happens if that startup is just okay as opposed to a grand slam? We're on location with Raj Singh from Jones Lang LaSalle joining us from the West Coast. And welcome to the Language of Business.
Lovely to be here. Thank you for having me, Greg.
What is PropTech or property technology?
PropTech or property technology is an umbrella term which talks about all the sorts of technology that we might apply to the world of real estate. That can be pretty broad. So it stretches from construction and the design of buildings all the way through to the management and use of buildings and pretty much everything in between. And happy to get into the details. The one thing I would say is that it means different things to different people, as often terms do. But we use it in that very broad sense, construction all the way through to actual occupants using the building day in and day out.
You mentioned that PropTech means a lot of things to a lot of different people. Is PropTech the fund, or is PropTech a portion of the overall JLL Venture Fund?
So JLL Spark Ventures focuses only on PropTech. But as I said, it's a fairly broad range. So on the one side, we have companies we've invested in who are bringing new technologies to building buildings. On the other hand, we have companies that we're investing in that are around financial services. How might you, as somebody who owns a building, how might you finance that building or perhaps sell that building? The way that the lens that we operate works is that if we can use it ourselves, or if we can see why our customers might use it, then for us, it's PropTech.
This must be a challenging time, though, to be in the commercial real estate business with so many people working at home. And some of these buildings, unless it's the past couple of months, really dormant for several years. How has that affected your returns or the fund's management, et cetera?
I will say that things are going very well. So counterintuitively, a lot of landlords are turning to technology because of the very things that you just mentioned. So if we don't have full occupancy, if there's more competition between buildings to find the right tenants, perhaps the technology that they employ could make the difference between somebody choosing them versus somebody else. An example would be a category that we call the future of work. If I can provide your tenants with a wonderful experience, maybe they'll want to be in the office a bit more than they do today. So if it's the case that you have a wonderful building downtown with a great view and super amenities, perhaps you need to be thinking about your tenants who might be hybrid workers, sometimes in the office, sometimes at home. Then you need to be thinking about things like flex working. Could I use the space I already have and have other companies who aren't long-term tenants use that space? And so there are a lot of different opportunities that are now coming to the fore, which honestly speaking, people may not have even explored if it wasn't for the unfortunate effect of the pandemic.
In the Boston area, a lot of hotels or office buildings are now being converted to lab space. Raj, is that something you're seeing in terms of a trend across the country, or is that more unique to the Boston ecosystem?
That's a super interesting question. I do not think it's unique to the Boston ecosystem. And just for context, commercial real estate for us includes things like labs, data centers, ghost kitchens, and so on. We are seeing quite a significant change in the way that people want to use space. And for obvious reasons, if you have a lot of great space that's not being occupied, can you find a better use for it? So Boston may well be leading the way here. I don't know, but definitely we're seeing that happen in other markets as well.
Raj, sourcing is everything from a VC's perspective. What areas of the country or even the world are you seeing the best climates for in terms of prop tech investments?
I agree with that premise. I think sourcing is really important and a huge source of return for VCs in general and CVCs in particular. What we're seeing right now is some really exciting activity in Texas. Austin, for example, has a very investor and developer friendly rule set. So consequently, we see a lot of prop tech companies that are doing innovative ways of building new construction. And in Europe, the regulations around how sustainability has to be mandated are more advanced than they are in the US. So we're seeing startups happening in Europe, in particular in Germany, where they are mandating you're going to have sustainable buildings or you won't be able to lease them out. The final area I'd say, which is a little bit out there, is in Asia Pacific, where we're seeing a lot of tokenization plays. So the whole concept of the blockchain and Web3, lots of people in Asia are looking for ways of tokenizing assets like buildings, such that you can have an ownership in a building without having to have millions of dollars to go into it. So fascinating things happening across the world at this point.
Raj, thank you very much.
My pleasure. Great to talk to you.
Raj Singh, who runs Jones Lang LaSalle's Proptech Fund from the West Coast.
What comes before any achievement? Ambitions. Always. That's why we put ambitions at the center of everything we do. And why we always expect more. More for our clients. More from each other. More out of every single day. And we don't just recognize ambitions, we thrive on them. We are 75,000 people from every corner of the globe, united in our passion to ask the biggest questions, to go further, dig deeper, to find answers, and to always deliver. Achieving ambitions powers us through our day. And that makes us different to other firms. It makes us speak up, reach out, and above all, stand out. It makes us each who we are. And it makes us all JLL.
A very common expression is success runs in the blood. And that well might be true of our next guest. We welcome Ashish Ramesh to the Language of Business.
Thank you so much.
I mentioned that it's in the blood because your family comes from a very successful real estate and hotel background. Tell us a little bit about that, please.
Yep. So I was actually born in a hotel. So that's a little fun fact about me. My parents own and operate a small hotel development and management company back at home in Fort Lauderdale, and have been dealing with real estate for about 30 years. My dad and uncle run the business together, and we develop and own franchise hotels. So you can say we're franchisors. So that's been a really big part of me since the age of like 12, 13. I've been working front desk and going to the office every day. So that really gave me a lot of exposure that I wouldn't generally have just being a part of a business.
I hope your parents got an upgrade, by the way, when your mother was giving birth to you.
Yeah, absolutely. They did.
You've amassed an impressive amount of knowledge, not only during your 4 years of college, but also pre-college as you were working in the family business. How did your operational experiences, working at the front desk, working in housekeeping, contribute to the knowledge you've amassed and acquired today?
So the biggest thing I think with that is just being patient and calm. With working front desk, you have a lot of customers who are always frustrated with you. My biggest thing is that I got the experience at a really young age, so I got to make those mistakes early. Experience is something that people should get as soon as they can. It definitely helps mature you and just just gives you a different way of thinking. Now I have an ownership perspective, I have a manager perspective, and a front desk perspective at the age of 21 that a lot of people don't have. So it just makes me go look at businesses and look at just perspective, have a different perspective on life.
During this entire episode, I've been asking each of our guests to give us their opinion about local or regional trends. Let's start with Boston. You've spent 4 years here. What are your thoughts on local, either commercial or residential real estate trends in Boston?
Boston, as you can see, I'm not sure if you see on Com Ave, it's exploding. Buildings here in Austin as well, our local residential houses are being bought out by the multiples and being knocked down and turning it into apartment buildings. And in regards to commercial real estate, there's a lot of development going on in the financial district and as well as Seaport. Seaport was completely like a parking lot, and now there's so much development going on there. So commercial real estate and residential real estate are exploding right now in Boston.
You've mentioned the office/commercial side of things is still pretty hot. How is that possible in the wake of COVID?
A lot of buildings in Boston especially are old, and throughout COVID, a lot of those buildings have been empty. So the investor or the owner of those buildings have been able to upgrade them. This will incentivize a lot of people to come back into the office. This is something that's not guaranteed, obviously, but as you see, companies are now starting to roll back work at home. So a lot of buildings were able to upgrade, put new amenities in there, which in turn might bring employees back into the building.
Ashish, how do rising interest rates factor into your investment decisions over the next 12 months?
That's actually a huge factor that we've been thinking about just in hotels itself. If you think about a PIP, it's called a property improvement plan, that the franchise or like a corporate brand tells what the local or regional hotel to do. And now those are coming up, and as well as the interest rates that are spiking, I do believe that a lot of businesses will be affected really soon. Just not in the hotel industry, but in the just residential industry as well. A lot of people haven't done renovations or upgrades in a while, and when the customer starts complaining and the bank starts asking for their money, that's not a good recipe for success, and that's when we can see a business to collapse. So I do see that happening in the future. A lot of businesses are going to do renovation, and then the bank will also be asking for money. And if they're not a big enough company with capital under their belt, I do see a lot of companies going down under.
What are your thoughts on tradable versus non-tradable real estate investment trusts or REITs?
The biggest thing I see the difference with is the tradable trust is you have a lot more people to respond to. And with a non-tradable trust, you have a lot more private investors, which you connect personal relationships with. With a public trust, people can buy shares overnight and you have no idea who that shareholder might be. With a non-tradable trust, you still have shareholders, and some of those shareholders you may not know, but you do want to build those relationships. So I think that's the biggest advantage on having a non-tradable trust, that you're able to personally build relationships with your shareholders versus just having a shareholder on your balance sheet.
Ashish, thank you very much.
No, thank you so much for having me. This was great.
Ashish Ramesh, a soon-to-be graduate of Boston University who is going into the commercial real estate industry. A lot has changed in the commercial real estate business post-pandemic, and we welcome back to the Language of Business Michael Goldman for now the third time. Thank you again for joining us.
Thanks for having me, Greg.
You're 2 blocks from the White House, so you are very much in the thick of it. What trends have you noticed in the past 12 months before the end of the pandemic and now that we're coming out of it?
Yeah, I think probably the first thing you notice is that there's traffic in the mornings, right? In the mornings and the evenings, there's traffic. So you start to realize that more and more people are going back to the office. You start to realize that wherever you're getting a sandwich or a salad every day for lunch starts to be a little bit more full, which is actually finally it feels rewarding, right? We've been back to the office now for almost a year and a half, and now everyone else is coming, and it's a great thing.
When you joined us in the heart of the pandemic, you said leases were already changing in order to reflect that environment. Now that we're out of it, what has happened to those lease changes?
The problem is leases are long-term commitments. So commitments made in the middle of a pandemic that extend 3 years, 5 years, 7 years, and now all of a sudden you're coming out of the pandemic. You can't all of a sudden start restructuring what was structured. So I think those that did more aggressive deals are going to reap the benefit for multiple years. I also think that coming out of it and truly being out of it are two different things. And by no means are we in the commercial real estate market out of the woods. You have people reevaluating their use of space, their size of space. It started with whether or not they even needed the space. So I think it's been a complete reevaluation process of how often they're functioning within the office. And that's led to people still making the commitment to have an office, but it might be a slightly smaller office, or it might have different accommodations for their employees within the office.
You mentioned in preparation for this interview that you've been going to the office every day. Is that true for the rest of your team?
I think probably 95% of our team has been back in the office since summer of 2020. It was something that as a company, we decided to come together and say, listen, we're going to be there. We're going to be together. We're going to have the right protocols and procedures and in place. But again, we wanted to be there active every single day advising our clients. And so probably 90 to 95% of our staff is in every single day of the week.
Where are you on the topic that's being debated inside and outside of corporate America that as of X date in 2022, companies are going to mandate that employees return to the office full time?
Look, I think there's two perspectives, and it's important to understand the perspective of the employee and the perspective of the employer. And I think for a significant amount of time, some of us have been asking the question of who's in charge. And from the standpoint of saying people need to get back, and this is when they need to get back. If you look at a calendar year, there are not very many key dates between January and when the summer starts, Memorial Day. And all of a sudden, Memorial Day happens, and we're talking about Labor Day and the holidays. So I think a lot of folks said, look, we're going to look at the springtime and say, we want folks coming back sometime this spring so that we can have people back in the office prior to summer. And what people normally do in the summer, and maybe take off a little bit here or there.
What innovations have you seen amongst your clients that are going to attract employees to want to return to the office?
We want to give more, right? We as the employer want to give more to the employees. We want to give more from a quality of property standpoint, from a quality of space within the property standpoint. So I think you're talking about different types of accommodations, from technological advances that people are making huge capital commitments to evolve their technology within the workplace, new furniture systems, which are big capital expenses that people are putting back into their spaces. But overall, it's the employer saying, we want you committed to not only the company or the organization, but we want you committed to the home that is where this organization and company lives.
You mentioned a few moments ago that people are assessing whether they even need an office or perhaps a smaller office. Do you ever see, with all the latent demand that is piling up, the pendulum shifting the other way, that companies are actually going to be expanding their footprint if the pandemic is finally behind us permanently?
Look, during the pandemic, a lot of companies experienced growth. And I think that's a really important point to realize is a lot of folks said, listen, we're going to band together. Our company is experiencing growth. We're going to lean in on that. And so I think we've seen a number of our clients actually be in expansion mode over the last 24 months. I think overall, you also look at giving more to the space. Well, that doesn't happen within a confined box. And so I think people have said, listen, if we're going to give more so that we can accommodate their employees, that may lead to expanded space in certain instances.
Michael, thank you very much.
Thanks so much, Greg.
Michael Goldman, the president of MGA in commercial real estate, 2 blocks from the White House.
Support for The Language of Business is from Boston University Questrom School of Business. We're also available as a podcast on Spotify, Stitcher, Google Play, or wherever you get podcasts. Thanks for watching.